Welcome to the Cashflow Project podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cashflow Project podcast. I'm your host, Steve Fieros with Tri-City Equity Group. Hey, we're excited. Today, we've got a repeat guest on the show. We've got Joel Miller on the show. He was on with us on episode 201. So if you guys did not get a chance to catch him on that episode, I would highly recommend you go back. Joel's an awesome guy, and he's got a wealth of experience. And so we're excited to have him back on. So for those of you guys that didn't catch that one, just a little quick brief intro for him. He's been investing in rental property since 1978, guys. He looks like a young guy. Don't let his handsome looks there fool you. He's been around for a little bit, and he's been flipping houses since 91. So you can definitely, we're going to pick his brain on some insight in terms of insight. You learn a few lessons along the way when you flip, when you're just investing and you've been in real estate that long. He served in numerous leadership roles in his professional and personal circles, and he teaches real estate investing at both the beginner and advanced levels. He's a best-selling author. His book, which I would highly recommend you guys to check out, it's Build Real Estate Wealth. It's also a hard money lender to other investors, and there's nothing better. There you go. It's a shameless plug for those of you guys who are watching. If you're watching the video, then he's got his book up. But if not, we're going to leave a link for you guys a little bit later on, so you definitely can check out the book for yourself, get you a copy. But yeah, again, he's in the industry. He's been in the industry for a long time. Again, his hard money lending, they service the investor community. And again, you want to work with people on your side who are right there in the trenches along with you, because they're going to understand better than anybody could who's not an investor. So I can guarantee that. But Joel, hey, we're excited to have you back on the show. We were having some technical difficulties getting you on this morning, but hey,
it's really just a hologram that you're looking at right now.
Hey, you know what? The future, we were joking a little bit about the AI stuff. That's going to be the thing of the future. But I think we still can draw back on lots of learn lessons and the tools that we have. So yeah, but excited to have you back on. And before a ski trip that I know you got coming on, but yeah, we'd love to talk shop here for a bit, provide some value for the listeners. And I know we're always going to do that with you. Yeah, excited to have you back on.
Yeah.
Now for those of our, just real quick, I know I did your bio, and again, you guys can go back and listen to a previous episode. Real quick, if you could just quick snapshot for those of our listeners that didn't catch you on our prior recording, fill us in just real quick. Just how did you get started in investing, and then we can talk about some current day topics and see what you're working on.
I'll give you the abbreviated version. I will just tell you that I first became interested in real estate when an investor built 4-unit apartment buildings on my paper route at the edge of our subdivision. And I just decided I would do that later. I went to school for accounting and also pioneered the mobile DJ business in this part of the country. I'm in Erie, Pennsylvania, about halfway between Cleveland and Buffalo, right along Lake Erie. And that's part of the point of my book, is that you can add real estate to something else you are passionate about, a career, a job, a hobby that takes up a lot of your time but doesn't provide enough income and doesn't provide enough retirement. You can add it on, or you can work to the point where you, quote unquote, give up your W-2 job. And my book talks about the tools to get to that point. So I started investing in rental property then as soon as I could after college, and those two careers existed simultaneously for many years. I retired from the DJ work about 15 years ago. 5,051 appearances, Steve. About a quarter of those were somebody's wedding. But anyway, then after operating rentals for a while, starting in January of 78, I did start flipping properties. In about 1991, we did not know that we should call it flipping because the TV shows hadn't come out yet. We just called it quick turn or something like that, but ended up just continuing to flip alongside the rentals and did about 100 plus houses over the years. And then in 2018, got into hard money lending to the other investors in our area, which gives me great satisfaction. And everybody listening should seek out hard money lenders wherever they are and develop a relationship with them, because this whole business, as Steve, it runs on OPM, other people's money. And having access to capital, like from a hard money lender, to make deals that are all cash with no inspections, close quick, that sort of thing, that helps you get a much better price on your properties.
100%. Yeah, no, and actually, maybe we can talk a little bit about that. I'd love to get your you pick your brain on current state of lending. If you're seeing any changes there, and obviously you kind of survey, what's the landscape look like, what your current rates look like, and just to go maybe some of the listeners in if there's anything different from maybe last year. But just to highlight real quick, guys, if you've never used hard money, because I remember when I first started in the business, especially when I was working as a retail agent, I go to one of the experienced agents in the office. This guy probably been in real estate for 20 years, just working as a retail sales agent. Just, hey, you're looking for a home for yourself, working with just traditional mortgages. That's all that was his forte. So I go to him because I had an investor reach out and he's, hey, you know what? Do you have any hard money lenders? So I'm like, I was new to Hawaii at that time and I didn't have any good contacts here. Excuse me. So I go ask this experienced agent. I was like, hey, who's your go-to for hard money? Like here. And he just looks at me all real strange. And it's hard money. Is, oh no, you don't want to mess with those guys. As if it was like, I think in his mind, he's thinking hard money. He's thinking like somebody's going to take a pipe wrench to the kneecaps
Like a loan shark
kind
or
of deal.
something.
And I'm like, yeah, exactly.
Wow.
And just so many people, again, there can be stigmas, there can be misnomers about tools of the business.
Mhm.
And hard money is just a tool. Or actually, you know what? You as a hard money lender, maybe briefly explain for those maybe new listeners, new investors, tell them exactly what hard money is.
As a hard money lender, I'm typically lending under one of two circumstances. Either number one, an investor is borrowing the money to buy and or rehab a single family home that they are going to sell to a third party who's going to live there, that would be a flip. In which case the lender would get paid off at the time you have the closing to sell the house. The other scenario is when the investor is borrowing the money to buy and or rehab a keeper rental property that they need to stabilize in some fashion, either by doing a rehab and or raising rents, getting different tenants in there, whatever, so that they can get to the point that banks will be interested in that property and they can get permanent financing on it, in which case the hard money lender gets paid off at the time you have your closing for your refi. Now, notice I said buy and or rehab. At least for me, sometimes the borrower already owns the property and they are borrowing the money on the equity for that property or the equity on another property altogether to get the money to do the rehab. And sometimes they are only borrowing the money to buy the property. They're going to do the rehab themselves or put the money in themselves. But quite often, in fact, I would say more than half of the time, I'm actually lending all the money to buy it and all the money to rehab it. So naturally, you're not going to get all your money for the rehab part of it at one time at the closing. Typically, the idea is to have you leave the closing from buying the property with the cash to get started on the project. So in other words, you're going to get some of your rehab money at the closing, and then the rest would be usually 2, 3, 4 draws until you get to the completion of the project. But hard money loans are short-term loans. Ours are typically a year. Sometimes it's a year and a half. Like, for example, somebody's buying a multi-unit place. We recognize it takes more time to rehab more than one unit than it does to rehab just one. So we might make that initial term a year and a half, for example. And I always build in a 6-month like automatic extension that the borrower can have no questions asked. It's not like you got to talk to me even about it. It's just that it's scheduled that the interest rate would increase after the initial time period. If your project's going longer, I'm not interested in taking your project or anything like that. I want you to succeed. If you need more time, you need more time. But the interest rate will go up because I expected to get that money back so I could lend it out to somebody else. So we compensate for that by raising the interest rate. But the payments then would just be interest only and monthly and no amortization. I don't do any amortized loans. But Steve, I was recently on one of the forums that somebody had posed some questions about hard money lending. And I realized that just like the real estate market itself, I think hard money lenders in different areas have different requirements with their borrowers. And I seem to have gleaned that maybe I'm not the norm as far as lending 100% of the purchase and 100% of the rehab, that sort of thing, because it seemed like others were making comments about hard money lenders requiring a certain amount of money down so you have some skin in the game when you buy the property. And maybe
I've seen that. Yeah.
some sort of a fancy, I don't want to say fancy, but a thorough maybe scope of work that you've actually written out and put a pencil to for the costs and turned over to the hard money lender. And maybe that hard money lender also wants to see that you have cash reserves to pull this thing across the finish line beyond whatever rehab money might be coming out. I don't know if that's normal or not. It's hard to say because I only deal in our market here. But I would say that it's worth asking. I don't require any scope of work. I'm working with experienced investors. We're making a decision about a property before maybe they've even had an offer accepted, much less had access to the property and make a scope of work. I don't require that. I don't really, it's hard money. It's secured by the asset and the character and relationship that you have with the borrower. And that's why you should develop a relationship with somebody local, a real personal relationship and you can find these people with your local organizations of like-minded people, like RIAs, real estate investment associations, or just any kind of investor group or landlord group that is organized and meets regularly. Go there, look for the old guys. You don't find a lot of young hard money lenders because the hard money lenders are created by people that have been in the business a long time and have a pile of money and just don't want to invest in property anymore. So they'll say, I understand all this business. I'll lend money to you if you want to invest and go out and swing a hammer, but I'm not doing that anymore. Those are the hard money lenders. Develop that relationship so that you can literally shop for properties knowing that you can just make a cash offer with the only contingency being subject to your partner's approval. Your hard money lender is your partner and you just tour that property. And sometimes when I'm doing that with a potential borrower, maybe it's a borrower that we've done business with, it's just a potential property, shall we say, I'm asking questions like, hey, do you see this? What's your plan here? What do you think about that? And sometimes by the end of that walkthrough, Steve, they're like absolutely sure they don't want to buy that property. It's not because I talked them out of it. It's just that I asked the right questions and everybody came to the conclusion that this is not a good one.
Yeah.
Those relationships. And then
thank you for,
maybe you could have all.
yeah, I was going to say, thank you for actually framing that the lender is the partner. Because for a lot of, I was literally we do coaching, right, too. And so I was talking to a new investor who was looking at a fix and flip property and they were not, Steve, how do I get the money? I've got an opportunity here. And so we were going over a potential deal. And Steve, I don't have 200 grand sitting in the bank for down payment or rehab costs. And I've got a deal though. So it's, how do I do that? It's okay. It's distressed property. Do I just go to my local bank? And it's no, exactly to what Joel's talking about. No, a lot of times, especially with the properties that we're looking at, guys, whether that be for fix and flip, whether that be a buy and hold, you can get great deals if you're able to provide value. And for us, for renovations, you're forcing equity, you're forcing value through updating the property. Right. But a lot of times, if you're able to force that value, sometimes it is just as simple as doing cosmetic renovations and updates and that kind of deal. But sometimes it's not. This house has damage. And for us as investors who have been in the business a while, hey, man, opportunity. If I see water staining and hey, because the property needs a new roof and it's got maybe some settlement issues, or in addition to the updates that it needs, that's all opportunity, guys. But it's not something that your local traditional bank, Wells Fargo or whoever, is not going to want to loan on that, because to them, hey, it's not a safe property. That's just not something that we want to even potentially own. We're not in the business to own property. And so it's like they don't want their borrower to immediately go in, use all their money to buy the property, buying a traditional 30-year mortgage, and then don't have money to fix the roof and to do the updates and do all that other kind of stuff. So they're not interested in that. So you go to somebody like Joel who could potentially help you out with a hard money lender, or a loan rather.
Yeah. Hard money loans don't typically work well with properties that don't need a lot of work, because you almost have to rely on the appreciation to have this whole thing be profitable. Certainly with a flip, that's the whole point. You're not going to buy a flip at the top of the market and then turn around and try to sell it at profit. That doesn't work. And with rentals, whenever you get a hard money loan on a rental property, let's say it's for 100% of the purchase and the rehab, you're banking on, in the allotted time, say within a year, that you're going to be able to go to a bank with a pristine property, all nice now, and have the appraisal on that property be such that once you take 75 or 80% of it, that they're requiring you to have as a loan to value 20, 25%, that, let's say 80% that you borrow is enough to pay off 100% of the hard money loan. You don't want to have to go to that closing with money. So really, that ends up being a free property. You didn't put any of your money in. You proved it. You got a loan for more than what you borrowed. So you leave the closing from selling it with some money. And then the tenants give you the money to make the mortgage payments. And when the mortgage payment's done, they still have to keep paying you the rent. And it's basically the tenants bought that. It's a free house. You didn't actually have to put any money down. But one thing I do want to go back to that you said when you first asked me the question about hard money lending, you said, what do I say to new investors? I do want to say that hard money lending is not your first stop if you're starting out, because it's such a relationship-based business or transaction, I should say. The hard money lender is going to want to see that you have some experience. Like for myself, if they're just doing flips, I want to see that they've gotten at least a couple, maybe 3 across the line at a profit, and things turn out the way they said they were going to turn out on that property. And beyond that, if they're getting into rental property, in addition to what I just said about the rehab part, I'm going to insist that they get education in being a landlord. Now, I'm going to insist that they join our local organization and come to our meetings. I want to see who you're connecting with as far as other investors go, and you're participating, you're learning, and we're getting to know each other. And I'm going to have you take what we call the Landlord 101 class, which is something that our organization came up with about 10 years or so ago, but I'm the main instructor for that. So if you take the class and you're in my class, I'm further getting to know you so that when you call me up and say, I got this deal, we're already past the who are you part. And by the way, I don't think we mentioned it. The name of my book is Build Real Estate Wealth. Enjoy the journey of rental property investment. It's about rentals, but I will say that I put a chapter in there about house flipping. And it's about house flipping. And then you get to the end of the chapter, there's a QR code that takes you to bonus material on the how-to of house flipping. So I didn't want to put all the how-to stuff in the rental property book, in other words. But part of this book obviously is going to be about borrowing, how to finance your properties. And hard money lending is one of the main subjects in that chapter that we talk about, because it's a really important tool to use. I didn't know anything about it whenever I was starting out. I wish I would have had somebody that I could have gone to for financing like this. But that you're going to pay a higher interest rate than you would expect on a regular mortgage. You're going to pay some points, maybe more points than what you would on a regular mortgage. But what you get in exchange is the ability to go out and literally make cash offers on properties, which brings the price down typically because sellers prefer that over a contract that has a contingency for obtaining bank financing, because they're fully aware that banks will underwrite you for 2 months after they told you and shook your hand that, oh, these are the terms and here's what I'm going to do for you. And 2 months later, they either say, actually, we can't do this loan, or we can't do it under the original terms we told you about. Sometimes it does go.
And I've seen that.
But quite often, it doesn't. You get pretty far into a deal and you've wasted time with a bank. And so the appeal of the hard money lending is the lack of underwriting, shall we say, and the quick close. The underwriting is done by me walking around the property and asking you a few questions. Now, the documentation, though, is the same as the bank. We're a mortgage state, so you got a note and mortgage, you got a assignment of rents, you got a deed in lieu of foreclosure. We make them sign so we don't even have to go through foreclosure. If we just all decide that they're not going to be able to pay, we just record the deed. Saves them the embarrassment of the foreclosure, saves us the cost and time of a foreclosure. And you're going to expect to sign a personal guarantee, even though you are buying this inside your LLC or whatever partnership. Right. And if you have a lead contractor, we'll want you to sign a mechanic's lien waiver for your protection in case the contractor doesn't pay people after you paid the contractor. Prevents them from being able to put a lien against the people that didn't get paid from putting a lien against the property. So we lock all that down with the paperwork, but the underwriting is next to nothing compared to a bank. I don't ask you what your credit score is for the most part. You're not showing me a financial statement. I know you. We're members of the same local group.
Yeah. No, and I'll comment on a couple of things there. So what you were mentioning there, like all of those little components, all of that comes, guys, all of that comes from things that have gone sideways. So this is a protection for him, for Joel as the lender, but also protections for you. So it's going to streamline the whole process. A lot of times, whenever things are built in like that, it's because they've come from other problems. That's been a problem at some point in the past. I had an issue. Oh, we're not doing that again. Let's make a tweak. Let's make a correction so that we can move through this whole process smoothly for everybody involved. And I love the relational aspect. And because again, I talk to investors all over the country, and a lot of times they just don't know they don't understand the mechanics of the different lending products and whatnot. Because again, if you're a new investor or you're somebody that's just not familiar with all the aspects of the business, hey, the only thing that you might have experienced is going to your traditional local bank and okay, I've got it. I have a house for myself, Steve. Okay, that loan process took 45 to 60 days. It's like how you said, they're going to underwrite you. They want all your returns. They want all your, bank statements and all that kind of good stuff. And it's okay, that's great. But again, they're going to take 45 to 60 days. I've seen deals fall apart literally at that 60-day mark or 58 days in. Oh, hey, sorry, we can't actually give you final loan.
Oh, yeah.
And and Joel is providing an option, and other hard money lenders too, because you're going to want to find somebody local to wherever you're buying. That's going to be in your best interest. Not saying Joel can't help you, but just like how he's talking of emphasizing relationship building, you do want to do that locally to wherever you are buying it.
Yeah, I will add this, that another reason for the importance of developing a personal local relationship with somebody is that, from my experience, it seems like the further away the hard money lender is from where you are and where you're investing, the more they will seem like a bank. So you've got hard money, quote unquote, hard money lenders, think the people you get stuff in the mail from that are from another town, state, whatever. And this is their business. They want to make these sort of loans. It is legit, just that because they don't know the market as well as you do, they don't know you personally, they're not probably going to come and walk every unit inside and out of that property. Because of that, for their own protection, they require more and more information from you. And so it seems like the further away they are, the more information. And so the more information makes it seem like they're just a bank. And from the standpoint of you getting all the way across the finish line with this loan, they're not a bank. I don't mean to say that they are a bank. I just mean that it seems like they are. But all the stuff that you have to provide.
Yeah, no, and that's true because again, like the further they are away physically, the less familiar they are with any of the local contractors, the deal itself. Because it's like that. I can guarantee you, somebody brings you a deal into your market that you're potentially going to lend on, you probably already are pretty familiar with that neighborhood, those comps would look like, the build style. Because guess what, guys? This is different in different parts of the country. Like we've owned property in various states from different climates. And I'll tell you what, the properties that we owned in Michigan were built to a different standard than the properties that are here in Hawaii. Here in Hawaii, we have single wall houses that a lot of the local flippers will renovate. Well, in Texas, I only saw single wall houses, and we're talking about $1 million houses that are single wall, literally just one wall, versus the only houses I ever had seen when I was in Texas that were single wall were houses that were selling for $15,000. But again, that exists in different parts of the country. And if you get a hard money lender that doesn't understand that because, they're in Pennsylvania or they're somewhere else, it's going, wait, that doesn't make any sense to me. I don't understand. Why are you spending so much on framing and updating and all this kind of stuff? We don't have that kind of product here.
And that's another reason to have a local person to deal with, because for myself, I offer whatever input and expertise that they ask for as they work their way through the project. They'll be in the middle of it and they'll call me and say, what would you do with this bathroom? What do you think I should do with this shower stall? Or should I keep the kitchen cabinets around? Because they're not asking to borrow money from me for any kind of project that I haven't already done myself in all the years that I was flipping houses. I don't force that on them if they ask, but the point is that I'm available. It's free. It's part of what you get whenever you borrow money from me in particular. And I would hope that any other hard money lender in your area would offer the same thing, which also brings me to another point. If you're listening to this and you're somebody that has a pile of money and thinks, I think I should be a hard money lender, and you've never flipped a house, you've never been a landlord, you've never done any of that stuff, do not become a hard money lender. You will not sleep at night because you don't know anything about this business. You got to be able to Take your checkbook into a place that's literally almost fallen down and saying, yeah, I see it. It's a good one. Shake hands. I'll send you a loan terms email and just reply you agree and we'll get it going. Unless I know from my own experience how all that works, how to have the vision beyond the condition the place is in when you first look at it and understand what people do when they fix them up, then unless I know that, then hard money lending is pretty darn risky for you or the borrower that you're not able to help.
Everybody will suffer for it.
Yeah.
Everybody will potentially suffer for it, because if the project is not going to get completed, and that's something that you as the lender would have already foreseen, hey, look, you know what, man, this is a this is a gut job down to the studs type of rehab, and you're allocating 15 grand for your rehab budget. There's plenty of things that you're way off base here. You're setting yourself up for failure as the lender, and the investor's going to go, that deal is going to go sideways. Okay, that project's going to be, it's not going to get done. So now you're going to be damaging somebody's reputation, somebody's going to lose money. Mm-hmm. That house is not getting put back on the market for that next home buyer that wants to have a nice new renovated house, where everybody's going to suffer for that lack of experience. I love that you are that involved in the project, because honestly, that's a step above. I've definitely worked with hard money lenders where they don't do that.
And again, I think if the investor wants me to, I have been at this long enough, and I know people that have been doing this long enough. A lot of times these guys are set and forget. I don't even need to talk to them again until it's time for the payoff, because they're doing it all right. But yeah, that's important. I'll tell you what, great, though. I got a little inspirational story for you. When I was on before, did we talk about my son buying his first rental property?
Yeah, he's involved with you there in the business. Yeah,
he's got his own business, and he'll eventually take over ours. I might have told you that I wrote the book as though he might be the only one who reads it, because I started writing it during COVID when we were stuck in our house in Canton. It took me like 4 years. It came out October of 2024. So when I started writing it, he's still in high school, early teens. He's 20 as we speak, okay? And it was becoming apparent that he was going to get involved. I'm happy to say that he bought his first rental property about a week after graduating from high school in June of 2024. I think I might have told you that last time. And what happened right after we talked is he bought another one. And so he's been operating two of those, and got his second one about 10 months ago from when we're recording this. Right now, we are waiting to close on his first flip property to buy. Awesome. And I tell you, the little weasel, he hit a home run on that first one with owner financing, 5% down, 30-year amortization, 6% interest, 8-year balloon, buying it for under an appraised value. That was his first rental property. And it came with tenants, and it didn't have to be fixed up. I'm like, geez, Brandon, I don't want you to think they're all like that. But anyway, so same thing is happening on his first flip. It's 2 minutes from our house, and it's in an upscale neighborhood, and he's round numbers. He bought it for $80,000. He's going to put 120 in it. It's a pretty big rehab. It was bigger than I would have wanted to see him get for his first property. It's not just carpet and paint, okay? And he's going to sell for $300,000. Has the potential to make, let's forget about closing costs, potential to make around $100,000 on this first one. Now, I'm going to finance him.
That works.
But he's going to do some of the work, but he's hiring contractors. Some of the ones that I use, and they'll be doing the main part of it. And he'll go work there. He's got a group we've already done the punch list because we had access to the property before the closing. So there's stuff he's going to do, stuff other contractors are going to do. And if he helps the contractors, they got to take money off of what he has to pay them at the end. Keep track of his hours, and whatever that comes up to, that's how much less he has to pay them at the end.
So I love that. I love that because, for one, so as a parent, the Bible says, hey, the wise man leaves an inheritance for his children's children. And a lot of times people think, oh, okay, that means I'm gonna have a fat insurance policy that, hey, whenever I pass away, I'm gonna leave my kids something. But it's not always just financial. He's benefiting financially, or will benefit financially, yes. But it's more of a mindset. It's more of a skill set. Hey, I can problem solve. I learn how to be around these contractors. I know how to underwrite, value a deal. There's so many other facets that come along, even just doing that transaction, even just the boldness to step out and do it. Like you said, hey, it's probably a bigger project than I think I would have wanted him to do. but he's probably comfortable doing it because he's already been working in the business. He's already around people who are doing big projects or doing big things. And a lot of times it's literally just that mindset. He's not scared because he's got people like you and is surrounded likely by people who are also thinking that way. So even just that boldness, to me, that's part of the inheritance, because now he's got started so early. How many of us, I can 100% say, I really wish that I would have been in that position at 18 years old, at 19 years old, at 20 years old, to even think that was possible. He's starting so much further in advance compared to all of his friends and his peers and stuff would likely be doing, right?
Yeah.
I love that as an inheritance piece. It's not just financial. It's like mindset, skill set.
The exit plan that my wife and I have is that we want to sell him all of our properties.
Right. Yeah.
Now I've sold off some down, I've sold down to what just the ones that he would actually be interested in buying, the most profitable ones, the nicest ones, and so on. In the past couple of years, I've sold several of the other ones off, but I'm not giving them to him. He's got to buy them, but they're all free and clear, or will be in a couple of years when he gets out of college. And so it's our intention to hold the paper and give him a good deal on the property and a low amount down and good financing terms. But Steve, I'm not going to come to a closing to sell him the properties and bring money to the closing, as the seller.
Right.
So I've told him, I said, you want these, you're going to have to accumulate some money to use for your down payment and closing costs and so on. But it'll be so nice to get that check every month for my kid instead of the money going the other way.
And that's something else too. It's right. Like how many people now, especially the high cost of living, the amount of inflation that's happening, I'm actually you're setting him up for success. And I think as a parent, like that's what we want to do for our kids. We don't want them to be dependent on us. No, I want you to be, of course you're learning lessons along the way, but if I do enough groundwork ahead of time, then I'm going to have to do less work later, because they'll be in a better position to be able to, to be able to buy the properties off of you. You've already given them the skills and the tools. He's just implementing. He's just practicing. He's just working on it. And again, as a parent, that's what I want to do for my kids. My kids are younger, but hey, by the time that they get to be that age, I want them in that position. I want to normalize what success looks like for them. I want to normalize, hey, I can go buy that property. That's a nice project. And I can own rental property. Like that, I think, to me, is legacy. I think that is inheritance. It's the skill set. It's the mindset. It's the ability to go do that for themselves. Yeah. Now, kudos to you. Good job, Dad.
Thanks, Steve.
Yeah. No, I love that. I love that. I think I think that's a nice spot for us to end on. Joel, for your book, guys, you can plug that in. He's got lots of experience and lots of stories and practical application in his book. Where can they go find out more about the book, Joel, and where can they pick up a copy?
Okay, there's a website that is just for the book. It's not like for me personally. Right. It's just the book. And it's very simple. It's joelmillerbooks.com. JOELMIEL. No, let me start over. JOELMILLERBOOKS. There is an S there. .com. And on the homepage of that, you can click on a button and see the entire table of contents in detail. So, what exactly we're talking about. And there's another button that will display a couple, 2, 3 of the meatiest paragraphs from each chapter, sample content from each chapter. And if you click on any of the buy buttons, it'll just simply take you to the page on Amazon where it's for sale. So it's for sale on Amazon and about 15 other platforms. You can find me on Facebook, Instagram, X, LinkedIn. But go to joelmillerbooks.com or search on Amazon, Joel Miller Real Estate. But the name of the book is Build Real Estate Wealth, and the subtitle is Enjoy the Journey of Rental Property Investment. And I'll do another shameless hold up for all of our radio viewers,
Right.
Podcast viewers, I should say. That's my radio background that comes out there. But yeah,
awesome. And then if they want to pick
I was just going to say it's a new go-to resource for changing your life with rental property. If there's anybody out there that's involved in a local organization, you want to teach to your members, you don't need to write your course like our organization did. Just get the book and use the book as a textbook. Teach right out of it. Have the students all have a copy of it. Teach right out of it. You don't need to write your course. And I believe that everybody that's ever owned a copy of Rich Dad Poor Dad by Robert Kiyosaki should own a copy of this, because it's a perfect complement to the theories and strategies that are in Rich Dad Poor Dad. It's all that plus a lot more of the how-to stuff. And also, I should tell you, this is all I got. This is not any kind of a lead-in to any kind of coaching, mentoring, boot camps, seminars, or anything. All I got is this book, and it's all you need. So check it out.
Yeah.
Thanks for
No, and I love that of course, I love that or the listeners could take that and they'll say, hey, you know what? Let's just get together. Start a local meetup. If you guys don't, hey, maybe you're in an area and you're just like, the closest meetup doesn't work for my schedule. The closest meetup doesn't, I don't know, whatever. You just want to do your own thing. Get a book like Joel's, right? Dive into the book and say, hey, you know what? We're going to talk about this chapter today. What are you guys' thoughts on it? You don't have to be an expert in the business to start a group and start networking with other people. Make it real simple. Like, you don't have to, just to Joel's point, you don't have to go develop a curriculum on your own. No. Hey, he's got the experience. He's got lots of learned lessons in there. Take the book, dive into it, share it with others, and you guys can do your own thing there while you're connecting and networking and you're learning. Yeah, no, great. And then is that the best resource then for what if they're local and they want to connect with you about hard money? Where can they learn more about that?
I only land in northwestern Pennsylvania. So if you are listening in that area, I would suggest to just contact me through just find me on Facebook and send me a private message and give you my phone number and we'll talk. But yeah, it's a kind of an all-encompassing sort of book. A lot of the books in the genre just talk about how to acquire and hold on to and get rid of property and tenants. But this starts with mindset. You've mentioned mindset a number of times. That's where it starts.
Yep.
You have to be in the right investing mindset, and you have to have your team. We talk about building the team and creating your entity, business entity, if in fact you're going to invest in an entity. Then we do the acquisition and all, how to have the property and all that. And then at the end of the book, it's got best practices for keeping calamity out of your life and business, that you can apply, and philosophical discussions like the difference between riches and wealth, which is a whole other podcast. So we'll do another episode on philosophy and stuff like that. So
yeah, would love to. Joel, it's been a pleasure having you back on. Maybe we will do another recording in the future specifically on that. That would actually be pretty cool.
Mindset and best practices, that sort of stuff. Yeah, cool.
Absolutely. Joel, I appreciate you coming back on, and I'm glad we got all of our technical details sorted out and we were able to hop on and record. But we appreciate you and appreciate the listeners. Always find value in the recording with you. So thanks so much for coming back on, and we'll circle back with you in the future.
Oh, you're so welcome, Steve. It was great to be here. Appreciate it.
All right. Aloha. Thank you. All right. Great conversation. Another conversation with Joel Miller. Obviously, he's got his book. So make sure you guys check out his book on his website or Amazon. There's a bunch of different platforms you can get that on. But always great to talk to people who have lots of experience in the business and life. Super helpful. Again, we can always learn from those that have gone before us. And if that can help us to avoid pitfalls and potential challenges, hey, we need to be able to do that because it's going to help us out and help out those all around us. But guys, if you're interested in investing with us, you want to learn more about our company and what we do, go to tricityequity.com. You can learn more. You can schedule a call with somebody on our team. We'd love to connect with you and see if it's something that could be a good fit for us to be able to work with you. Of course, if you're local here in Hawaii and you want to come out and network, we'd love to see you, meet you in person, Honolulu multifamily and more. It's more because it's flipping, buy and hold, multifamily, commercial, residential, you name it. So we'd love to connect with you here locally. If you're on island or if you're coming out to visit, we'd love to be able to connect with you if the schedule works. So go check us out there. A variety of different resources, but you can search for that here in Honolulu. And of course, hey, if you guys are finding value in the podcast, like, subscribe, share. We'd love to continue to grow the show. And so we can only do that with your help. Hit that subscribe button, hit that like button, share the episode, share the podcast with anybody that you think might find value in it. And we would be greatly appreciative. But that's it for me today, guys. We'll see you in the next episode. Go out, take some action, and see you next time. Aloha.